Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Wednesday, the last trading day of January the 31st, 2018. We're at 4:20 p.m. Central Standard Time. As it turns out, the market came back and settled higher. I was on Fox and at 2:10 in the afternoon, 2 hours ago roughly. The market was actually lower, and one of the things, and I'll stick with it, the market internally is losing its momentum. You got to be a bit cautious right here. You lost what we call the embedded readings. The FOMC announcement came out, and I'm including it tonight for all my subscribers. But to make a long story short, the Fed still looks very much on track for a March rate hike. They still think 2% inflation is an attainable target this year, and we will see how the data comes in after that. They see good growth. We had good ADP numbers today. We get Friday, the all-important jobs data. That number is expected to be 177,000 jobs added and keeping at 4.1% unemployment. In the metals, you were up another $5 late into the trade today. In the silver, you were up about another 8 cents from here and about 70 cents higher in the copper. Remember, the settlement price where you get here is determined at 12:30 Central Standard Time, while the last trade's at 4 p.m. Dollar index down a little as most of the foreign currencies came up on the day. So let's go to the charts and get a feel for what we have. And by the way, down 20 cents in the nat gas as the weather forecast took a radical shift today over the next 2 weeks, and now more normal temperatures, not that hard freeze that they were talking going out east, and the energy price is up a fraction. On the S&P, we had gotten up to 2874.50. We've backed off now for the week. We are down 48.7 points. For the month, strong gains. The whole month was probably a 5% plus gain, almost 6%, so very good gain for the month here. When we take a look at the daily bar chart, you can see the correction that has set in. And when I put the swing line on it, you now have a pattern of a lower low and a higher high. So from the sideways action that began in December and launched right at the beginning of the year, making consistently higher lows, higher highs, that pattern has been broken. So the momentum is possibly coming out of the market. That doesn't mean the overall bias isn't up. Momentum is coming out, and another factor is happening. We're starting to get bigger whipsaws during the day. I pointed that out when I was on Fox to Liz Clayman. I said, Liz, everybody's getting caught up on the amount of points you're up or down, but when you're 26,000 in the Dow, when you're sitting here at 2825 in an S&P, to get a 1% move, how many points is that? And that's only a 1% move. So we're used to the points. You got to go back to the percentages. As you can see, you're still over the 18-day average of closes. That's 2804, so the bias remains up. The market didn't quite get to the upper Bollinger Bands before it fell off this time, and you've lost the embedded reading. When you lose an embedded reading, often, I am not using the word always, that wouldn't be the right word, often, price and the 18-day average make a run at each other, and they often get back together. You had it happen here. I can go on and on. More times than not, you will try to do it, and you hit it back here. But do you have to do it every time? No, but will they often make a run at each other? Almost always, almost. So what we've got there is what I said. I think you've lost some of the upside momentum. In the NASDAQ, by the hair of its chinny chin chin, it kept the embedded reading. You're down to an 80.04. If you go back, you can see at higher numbers here. So you're slipping, which means unless you're up strong right away, if this market takes out yesterday's lows of 68.90, I'd be a bit cautious. That could set this market back to its 18-day average of closes. And you know I'm going to say the same thing in the Dow, is it's in the same predicament. Basically what's going on is the markets have lost upside momentum. The Russell down to the 18 and now through it today in a downtrend. This is the only one in a downtrend. Lower highs, lower lows. I would be surprised not to see pros selling this market at 1587. I'm not saying the risk is 1, 2, 3. It's back up to 16, let's call it 13, but trend is down. In the VIX, the market, all it did the past 2 days is move to the right-hand side of the upper Bollinger Band. You can't get away from the fact, at least right now, that the market has made new highs on the move, and it has carried the market with a bit more volatility than we've seen as of recent, in fact, for months on end. So that's a heck of a way to start January off. When we come to TLT, you've kept the pattern of lower highs, lower lows. We're getting a bounce in a market that is oversold. Okay, got down cheap enough. Maybe it'll get a bounce here, but the pros are probably waiting for the market, if it can get out of the oversold condition, back to the 123.87 level to see if there's worth selling at that point. When we come to the T-bond, you came down, made a lower low, and bounced away. You still have the embedded reading. So here, too, I'm looking to see what this 18-day average falls to tonight. I would not be surprised to see traders stepping in against that. But if to get there, because you're at 147.26, you might lose the embedded reading. You have to take a good hard look to see what that might or might not offer. Bearish embedded reading, that's when the slow stochastic reading goes sideways under 20 for several days or more, with lower highs, lower lows, downtrend still entrenched here. Dollar index kept its embedded reading, as you can see. The question is, on a steady to higher opening, would it keep it tonight? And that's what I'll be looking to see. But you still have the lower highs, lower lows, the bias down because you're under the 18-day average. In the eurocurrency, you had lost, not just today, the embedded reading. That often leads to price and the 18-day average trying to come together. Hasn't done it yet, but you haven't moved up very much either. The market, since this occurred back here, and we can see where this stepped in. I think it was, if I'm correct, yeah, it was on Monday when you lost that reading, and that was then at 124.26. And you're back to 124.47. You're 20 points away from the close of where that did. So you can see that you haven't gone anywhere yet. Now the question is, what does it do next? There's no reason, by the way, to be short when you're over an 18-day average, as I teach in my charting course, and we'll talk about that in a minute. But there's a lot of reasons not to be long. In the British pound, you lost your embedded reading. Same story. The bias is up. I know the trend is up. We see that in the others. But you've lost that momentum, and sometimes that's enough reason to come in and out of markets. Now, in the end, you kept your embedded reading. This market was definitively a little better than this late in the day. We'll see if it can keep that. Or is the market saying, you know, we don't need safe haven status? The Bank of Japan did step in, and they did a little more aggressive buying of their bonds and notes to drop the yield from coming up and showing what? They're showing a cross over the bow. Guys, we're here. If you keep driving my yen up, we're going to do something to hurt you. That's called the shot across the bow when a central bank does those type of actions. That's what you had today. In Bitcoin, here we have a market that's now settled under 10,000. The market did get intraday, as you can see, around the 9,700 level. It's got the sideways action. We'll see which way it breaks out of there. In the Brent versus the WTI, one of the things I thought I was pretty clear on was that instead of the actual Brent itself or the WTI, the play had been, and it began up here when the market started breaking back, and I've said this in the month of January, go to my tapes to you, and I said I think the bigger play is going to be the differential spread, because that's where it seems to be the action, and that's exactly what's been taking place. The two are coming together in price. Now, will these markets be able to hold on is what a lot of people are asking. I keep looking at every month that I see the IEA numbers. U.S. in November produced on a daily basis more than 10 million barrels a day. China is now using Russia as the largest part of its import. They've overtaken the Saudis, but China imports 56% of their oil from OPEC countries. So important parts to remember. Market backing off a little. Look at all this sideways action. I always pay attention to that because from here you either get another launch to the upside or this creates a top where the market comes down. We'll see which one. You're definitely not trending. I can tell you that in a number of these. Here you have the swing line down, but you closed over the 18-day average. Again, I won't call it a trend. The bias, what? Not the bias, rather the momentum off the slow stochastic, still pointing down. Rebob gasoline, when you lost the embedded reading, you went back when you lose it to the 18-day average. Unfortunately, it did it all at one time. And from there, it just sort of stalled itself out. That's pretty much what I expect to happen when you get to that number. You'll probably tomorrow on a steady market lose the overbought condition. That number will slip back under 70. Nat gas, wow. Get up to the upper Bollinger Band, you just collapsed out of nowhere, went back to that number, the 18-day average. Now, it didn't even stop today at the 100-day average. It just went right through it. But generally, one of those two numbers, if you're above them, have a tendency to grab in the market. And while we're talking about that, let's talk about what I teach. You know, many of you watch and you like this review. Can you do it yourself? I can make you do it. I can teach you exactly how to do it. You'll master it in no time at all, couple of weeks, and then you'll start looking at charts in a different way. How do you do it? Well, it's a mixture of videos, which are all online. I don't send you anything. It's all online. You're able to play them. I give you the charting software. Our charting software is a $90 a month value. Then you get access to my videos and so on. That value alone is another $60. So you get $160 worth of value. Then the course and all the materials that go with that. The whole thing's $129. You might want to take a look at it. How do you do that? You can either talk to us on the phone or go to our website, go under the word education, drop down, take a look at the facts page and all. I think you'll find it well worth your time and effort. It's January. Why not get your disciplines? That might be the right word. Believe me, I don't walk on water, but I think I can teach you a trick or two. You might want to take a look up here also. If you're watching me on YouTube, if you click this link, it'll take you right to that page. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.